All right, what's up everyone? This is Pratesh here with Kaizen Crypto, bringing you guys another video. Here today, it is August 5th, Monday, 2019, and we're going to be taking a look at a few different topics. First off, I just wanted to state that the Litecoin block halving just happened yesterday, so very exciting news for Litecoin hodlers. If you guys haven't had the opportunity yet to check out this video here, Bitcoin 2020, where I explain the difference between inflation and deflation, that just goes into more detail about the economics behind the Litecoin halving and what that means for the miners and the block rewards going forward. But very exciting news for Litecoin hodlers. So in this video, guys, to get started, we're just going to be taking a look at the overall market, just seeing here that Bitcoin really just dominating. Yesterday we had a really nice close above 11K, and since then we've been able to break above some levels here. You know, Bitcoin is just leading the market, up 8% here today. We're also going to be looking at the Bitcoin dominance. Right now the trajectory is straight upwards for Bitcoin dominance. I think that we're going to see this continue to trend how it has been. I would say at least until we do come around the 80% mark here for Bitcoin dominance. I think that that's where we're going to see some resistance with dominance, but we shall see. We'll talk a little bit more about that here in a minute. We're also going to be taking a look at the Bitcoin price chart just to get a better idea of what some key resistance levels might be, where we might be able to find support if we are to have a pullback. I've also got a few things pulled up here, looking more at the macro view of crypto and Bitcoin. This right here is showing central banks to hedge dollar risks with Bitcoin, according to Anthony Pompliano. So we're going to talk a little bit about that and how Bitcoin plays into the macro factor of economics and cryptocurrency. And this right here, also, I've got this little graphic pulled up. This is brought to you by Demonocracy. This is taking a look at all the money and assets in the world shown from this physical, I guess you could say, illustration. And we're just going to be looking at this here and how Bitcoin is going to tie into it. All right, you guys, so let's get started. If you guys do find value in this video, please be sure to drop a like. And if you haven't already, be sure to hit that subscribe button. So what we're looking at here with the market, overall market here, Bitcoin clearly leading the charge. Now, I know Cardano holders, yes, I know it's a it's a bad feeling, but it is what it is. With the current situation where we're at right now, Bitcoin clearly leading the way. A lot of capital, a lot of, I guess you could say, liquidity is being sucked from a lot of these altcoins and going into Bitcoin. And you know, that's really fair, considering that we're going to be looking at the Bitcoin block halving in May 2020. So that is really right around the corner, and you know, I'm sure that that event is going to be priced into Bitcoin before the event occurs. Just like what we saw with Litecoin, you know, we did see a little spike up in price before the halving, and since then the price has corrected only a little bit, relatively speaking, and you know, we're still able to hold this level of support. So I think we might be able to find something similar with Bitcoin. Now, a lot of people are talking about when is the next altcoin season. You know, I'm waiting for my bags to pump. These altcoin bags are getting super heavy. Well, guys, I gotta say, you know, for those of us who have been averaging into our positions, this is really just that blood in the street moment, right? You know, be greedy when others are fearful, and fearful when others are greedy. So if we can take that expert advice and apply that to our own investing, and this is not financial advice, guys, I'm just telling you my thoughts and opinions, but based on what we can look at here, I think that we are going to continue to see Bitcoin dominance grow, but there are still tremendous opportunities here in this market. You know, a lot of people were looking to buy Bitcoin at under 10K. It may seem right now that that ship has sailed, but in the grand scheme of things, guys, if we're looking at Bitcoin, let's take a look at this price chart here. If we zoom out, you know, we can see, if we compare where we were at back in 2015 to where we are now, this 2015 is really where we were at before the halving and before the previous bull cycle. if we compare ourselves to where we were at that point in time, Bitcoin even under 20,000 is a steal, right? Because let's take a look here. So we had reached an all-time high with Bitcoin on December of 2013, and we had only reached that high again back January 2017. So it took roughly 4 years to get back to the previous all-time high. Now, is it going to take that long for us in this current cycle? Well, let's take a look. So we had reached the high at around December of 2017. And based on where we're at right now, if we zoom in here onto the price chart, we can see that, we're in 2019, and the price, if you take a look at it, we're almost at 12K. We don't really have too far to go to reach our previous all-time high. So in the grand scheme of things, the time that it's taking to get to the next all-time high, or the previous all-time high, has actually decreased, which is interesting. It shows that there is more sentiment, more awareness, more interest and adoption being built around Bitcoin, and that there are buyers at these levels. So it's very interesting to see that. Based on the technicals that we're looking at here, we can see that on the daily time frame, we did have a MACD cross here, so we were oversold. We were able to cross to the positive, and now it looks like the MACD is ticking to the upside, as well as the RSI breaking above this horizontal line of resistance. And we can see that the price was able to give us a nice bit of bullish action here. It would have been nice to see a little bit more follow through volume, but we might be able to see that volume really start to kick in once we break some of these previous levels of resistance. We could see here we formed almost a double top. We were not able to form a higher high. So that's where we might see some of the volume come into play. Let's go ahead and zoom out here on the weekly time frame and take a look and see. So we are still continuing with this bullish momentum on the weekly time frame. Pretty much the entire year for 2019, we've been able to see Bitcoin just absolutely tear it up. Just amazing price action for 2019 so far. So what we're looking at here, we can see that there is definitely some confluence of price action here at this level that we're at currently. Now, I would expect to see some type of resistance, and you guys let me know what your thoughts are. I'm just giving you my opinion, but I would expect to see some type of resistance, of course, right here around about the 14K level, and then after that, potentially the 16K level. So I'm looking at that for my upside targets. Of course, I'm looking at this right here, this declining volume. This is like a bearish divergence almost, where we can see that the volume has not yet confirmed the upwards movement in price. So still waiting on a nice break up in volume here. But let's continue over here. I did also want to show you the Bitcoin dominance. Bitcoin dominance is really on an upward tear. I think that we're going to continue to see this type of trend until at least we don't approach some of these levels here of resistance. This 80% level, which previously acted as support. I would think that we could see it form some type of resistance until we do see some type of alt season, or some of these altcoins really taking off. Last little bit that I've got for you guys, a couple things. So central banks to hedge dollar risks with Bitcoin. So what we can see now, this is more of a macro perspective, guys. What we're looking at here, there's a whole bunch of things going on with the US-China trade war, tariffs. The Federal Reserve has just recently cut interest rates by 0.25 percentage points for the first time in over 10 years since the 2008 financial crisis. So what does all this mean for Bitcoin and for gold, really? Because gold is what people have historically known to be as a store of value, as a safe haven asset. So with the emergence of blockchain and Bitcoin, what are central banks doing about it? So according to this article, Pompliano goes on to say that according to the research and the data that has been given to us, these institutions and these central banks, they are interested in non-correlated assets. Bitcoin is a non-correlated asset. And when you consider the asymmetric upside potential of Bitcoin as an asset class, I think if we take a look here, we can see Bitcoin's market cap is just over $200 billion compared to gold, which is at a market cap of over $7.7 trillion. So there is a huge discrepancy there in terms of the size and valuation of the overall market. You know, just for the cryptocurrency market to hit $1 trillion would be a huge milestone. We haven't yet hit $1 trillion market cap for the overall market of crypto. So with that being said, you know, are banks and institutions looking at gold, or are they looking at Bitcoin? My opinion and my thoughts are that they are going to be more interested in Bitcoin, considering the scarcity. There is a mathematical limit on the supply of Bitcoin. Never before have we had this type of scarcity for a digital asset. You know, the network effect, the fact that Bitcoin has been around for over 10 plus years at this point. So I think that there is a lot of interesting developments happening for Bitcoin, and this can only be beneficial for us. And then this little bit right here, just to kind of piggyback on that, what we were discussing earlier, this is just a graphic to put things into perspective with all the money that is in the global economy. So this graphic can be found on demonocracy.info, and this is a liquidity pyramid. So let's take a look and read just briefly what this article states. So it's saying, as financial risk increases, money tends to move from the more risky assets, in this case they'd be derivatives, to the less risky assets, which would be physical cash and then gold. Nothing is without risk, but risk is relative. The issue is that there is very little physical cash and even less gold compared to the more risky assets. This makes for a crowded trade in times of high risk when everyone wants to jump into cash and gold, pushing up the price. Now, this does not take into account the fact now that we have cryptocurrency. So with the fears and global tensions, and I guess you could say the flock to safety from these high risk assets, you know, Bitcoin is now being described as digital gold. And the fact that the market cap is a fraction of what gold's market cap is, will we see an increase in price? Well, I think it could very well be an interesting catalyst for what could potentially lead to the next bull run. All right, you guys, well, that is pretty much what I have for you here in this video. I hope you did find some value. If you have any comments or suggestions for future videos, please be sure to drop a comment. And don't forget to hit that subscribe button. Click that notification bell also so you know when I post a new video. I've been posting content almost every day, so definitely stay tuned for the next video. All right, you guys, till next time, cheers.